Good evening. The results of TVS Motors were pretty good, and therefore the market rewarded it by a rise of 3% as soon as the results came. The company has improved its margins on a per vehicle basis, even as net profit or as EBITDA. But the company has had a 6% increase in the last 3 months in its price of shares, while its major competitors, Bajaj Auto and Hero Motors, have declined by 15 and 10%. That is, while the shares of Bajaj Auto and Hero Motors have declined significantly, that of TVS Motors has gone up. Is it because that in the third quarter results, one clearly sees that margins per vehicle and as overall margins of the company has increased significantly? I think not. What has really happened is that TVS Motors has had the first mover advantage among the big manufacturers of electric vehicle. It announced that it will have iQube, a TVS electric vehicle, which will be launched shortly. The order book waiting for a TVS iQube electric vehicle is at 6,000 pieces. That is, TVS has a ready-made order to deliver 6,000 pieces. Also, TVS announced that it will launch an all-electric three-wheeler. The order book for electric three-wheeler is also in excess of 2,000 and has also got a 2,000 number order from a public sector company. So the TVS electric auto is already sold 4,000 pieces. It also has tied up with Tata Power to set up charging stations around several places for convenience of electric vehicles to be charged. Therefore, it is very clear that TVS Motors has got the first mover advantage in the electric vehicle space. In my opinion, that is not a big advantage because it is not going to take long for Bajaj to launch an electric vehicle. They have already launched Chetak and done a trial run, and they have said in their Chakan factory, which is a major center for them, that they will be setting up a plant to manufacture electric vehicles. TVS is the third largest two-wheeler manufacturer when you compare Indian homegrown brands, that is mainly Hero Motors, Bajaj, and then TVS. But if you look only at motorcycles, maybe Honda is slightly bigger than that. TVS makes a variety of vehicles. It makes a range of motorcycles. It manufactures mopeds. It manufactures three-wheelers. It also manufactures a scooterette, that is TVS Scooty, which is less powerful than a normal Honda scooter and is also very popular among women. So TVS has consistently held on to the third place and has managed the transition from leaving from Suzuki and becoming an independent manufacturer. Also, it has acquired several foreign companies, especially in electric vehicle technology, and also has acquired Norton Motorcycles in the UK. So TVS has been making a lot of investments. Then what is the problem in TVS Motors in the long term? The long term problem of TVS Motors is that, in spite of all its cost management and other efficiencies, its overall margins are way behind its peers, that is, Hero Motors and Bajaj Auto. The margins of Bajaj Auto and Hero Motors is at least 10% more than TVS Motors. Consistently, for a long period of time, TVS Motors has not been able to make the margins that Bajaj Auto or Hero Motors have made. Also, if you consider export markets, TVS has cracked the Southeast Asian markets, whereas Bajaj has not only cracked the Southeast Asian markets, has also made deep inroads into Africa and Latin America. 65% of all Bajaj vehicles is exported outside India and only about 35% is sold in India. So Bajaj has a huge export market in Africa and Latin America. What this does for Bajaj is it de-risks its dependence on the Indian market and is selling three-wheelers and two-wheelers across the globe. In three-wheelers, Bajaj has a stranglehold even in Southeast Asian markets like Indonesia, where TVS competes with it for space. And the biggest advantage for Bajaj is that it controls the domestic three-wheeler market, and TVS is a distant second player in that game. So, unless Bajaj falters in rolling out its electric vehicles, TVS will not be able to gain a major market share. TVS remains a highly overvalued stock at this point of time, primarily because two-wheeler sales in India have stagnated big time. Three-wheeler passenger vehicles and commercial vehicles have gone up, but they have not gone up to such an extent that it can compensate for loss of market share in two-wheelers. Overall, all two-wheelers are selling less than what they sold nearly a decade ago, with unbranded and less known brands making big strides in electric vehicles. Another branch of the family, Munjal family, Hero Electric, has the real advantage in electric two wheelers. It claims it has already sold this year 100,000 two wheelers and is now moving to a point where it has tied up with Mahindra and Mahindra to manufacture and sell 200,000 two wheelers next year. So, whether it is TVS or Bajaj, there is a lot of catching up to do when the market churns. And in the next 5 years, the two wheeler market will primarily become an electric driven market, especially with crude oil being so high. People will see the total cost of ownership and find out that riding an electric bike is far cheaper than maintaining an IC engine bike. I expect in 5 years' time, nearly 30 to 50% of the market will be electric vehicles. Thank you for watching. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written two books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support.
For hot financial news reviews and economical updates, watch Be Rich. Please don't forget to like, share, and subscribe our channel.